16,000 per week in a gold, and it's not luck. It's the result of 4 trades where I noticed a consistent pattern. In this video, I won't just show you my trades. I'll pull apart the exact pattern I look for every day. You'll learn how to identify it, how to trade on it, and you'll get a clear plan to implement in your trading today. Let's get started. First, I'd like to give you a bit of theory. I primarily trade gold on a 15 or 30-minute time frame. This allows me to make trades almost daily or every couple of days. The essence of gold is its cyclical nature, and there are 2 recurrent moments that gold favors. The first pattern is a triangle. I think you're all familiar with it. It's an ordinary triangle. It consists of 2 trend lines that have liquidity above and below. Let me illustrate how a gold chart might look. Let's say we have an upper boundary and a lower boundary, which essentially serve as support and, of course, resistance levels. At some point, the price breaks out of either the upper or lower boundary, tests the broken trend line, and then heads off to conquer new heights. This happens because there is a significant amount of liquidity above that needs to be tapped into. This liquidity is formed by the maximums that the price created while moving within this range. And the same goes for the bottom. There is a lot of liquidity behind every low, where trades have their stop losses placed. Thus, nothing stops the price from dropping down, testing that area, and going to take the liquidity which is below. However, this is not the only scenario for price behavior. There's another, which is essentially the same principle. Within this triangle, the price sells out, slop liquidity accumulates due to these trend lines, and sometimes the price just shoots up or down immediately, leaving a zone of imbalance in this wake. Let's assume that here and here we have an imbalanced areas. Therefore, there is a certain probability that after breaking out of this triangle, the price will reach and reverse, or continue its upward or downward movement after returning to this area. This is our first setup. It's very simple, and you'll see my trade based on this setup today. Gold also likes to trade not only within a narrowing range, but also within a typical sideways that you're all familiar with. However, this sideways has a certain peculiarity. We won't just blindly enter short trades from here or long trades from there. It's a bit more complex, but nothing overly complicated. So let's suppose the chart once drew these 2 boundaries using some picks. We accepted them as limits of a range. As the price moves from the lower boundary to the upper, or from the upper to the lower, slop liquidity can form, which will later give the chart acceleration after a breakout occurs. But even this isn't the most important thing. The most important aspect is to see the very first touch of the price of the resistance or support zone. After that, the price usually pulls back, and gold in such range loves to take liquidity. And this means there might be a short or long squeeze, and horizontal liquidity behind the last maximum is taken out, after which gold finally reverses. The same thing happens here. The price makes a sharp squeeze, after which it continues its movement towards the upper boundary. And as a result, traders who purely trade off support and resistance levels are often liquidated. There's another interesting point. Let me illustrate it with this tool. Sometimes a bottom forms, and there's also some trend line involved. Often it seems that the price has broken this trend line, and we think, well, that is, the trend has left. But then the price returns to this trend line, tests it again, and then begins to move upward. In this situation, 2 things happened immediately. First, the minimum is updated, we've refreshed it. And second, while moving, we tested this trend line, and at that moment, we enter a trade on the retest, either for liquidity removal from the last minimum, or if you are trading down, from the last maximum. So yes, this factor is what we've been trading today, and it's very common. So let's move on to practice. I'll show you where to set your stop loss and take profit to avoid losing money. Now let's take a look at the first trade in gold that brought me nearly 4,000 in profit. But before you see it in a real example, I'd like to recommend that you subscribe to my Telegram blog, which I've been maintaining for over 2 years. Yesterday, we literally closed the trade in live mode. You could have copied it completely for free. or simply connect it to the copy trading of my account and essentially receive the same trades I make every day on my account. So when it comes to gold, it's quite simple. As you can see, we already have a lower inclined liquidity formed, which is quite a global trend line. And essentially we need to wait for another line to form from the top in order to create the triangle we talked about at the beginning of the video. Well, it just so happens that the first trade is precisely our breakout from the triangle. As you can see, we already have the lower boundary of the triangle, which is historically confirmed and represents a significant and global zone. So I can't imagine what will happen if the chart suddenly breaks this trend. And right now we need to observe the price formation, and accordingly determine the upper boundary. As you can see, a new local level is forming here, and I can see how the chart is gradually starting to fade. Therefore, considering that we have a solid 2 or 3 touches here, this could become a new upper boundary for our triangle. And in this middle, I marked an important area that is currently acting as support, but for a while it served as a resistance. And for this level, you could set your stop loss or take profit. So let's see what happens when the chart breaks out of this triangle. And this, by the way, is a characteristics feature of well-drawn trend lines. So when the price almost immediately starts to rise or fall after breaking out of trend, I understand that there might not be such a retest. So my nearest area of interest is this local level we recently marked. And therefore from there I can consider my long position, as I said, with a stop just below this global level. So where could my take profit be? I want to point out that we are on a 30-minute time frame, so the trade will be quite long on this time frame. And here the level we identified in this case is the local maximum from which our triangle started forming. So this level could very well become to take a profit for my trade. I can of course adjust my stop loss a bit and include the imbalance zone to see where my important zones are. And as we can see, there is also an imbalance zone here. And overall, from either of these areas, I can take a long position because imbalance acts as a magnet for our price. And I'm setting my trade with a risk-reward ratio of about 1 to 1.5, which suits me just fine. So let's see how this all ends. So we do get a retest, but it might not have happened, as I mentioned, and immediately after that, the upward trend begins. I ended up with the short trade that bought us 3,800. So the second trade is very interesting at the same. It brings me more than 5,000, and in fact it was even simpler than the first one. As I said, gold tends to get stuck in different ranges, so I can already automatically draw a boundary for the next range. And let's say it will be a schematic one for now, but a trend line is already visible here that the chart could overcome and fall. And the question is, where could we fall? This could generally be the middle of this triangle, or it could be a new level that formed right here. Due to retest, this is also an area of interest, but as I mentioned, for us to make a short trade from this boundary, gold needs to break the maximum that we used to form this resistance level. And for now I won't set a stop loss or take profit, and let's see what happens. But as you can see, the chart seems to be moving along the trend line, and of course it can be drawn this way, and here I will really consider a short position. So there are still no super interesting imbalance zones, except for the lower one, so we can place our take profit here. And correspondingly, there is not much higher to set the stop loss, so I'll focus on the risk-reward ratio. I think a trade ratio of 1 to 2 or 1 to 1.5 is a classic trade that I usually take, and that suits me overall. As you can see, the price reached the imbalance zone and reverses, so I highly recommend using this indicator. It's very easy to add through the indicators panel on TradingView. If you switch to a lower time frame, you can draw a trend line. Let's see what happens with it. And as you can see, the price has dropped again. But why, for example, didn't I open a trade for an increase here? It's simply because we didn't reach the support zone. This is a key feature of this trading, and we need to break this minimum in order to open a trade for an increase from there. I wonder if there will be any update. As we can see, we don't have an update of minimum, so there is no trade here. But now on this candlestick we can already enter in a downward transaction because we are not removing liquidity from here. And of course, but at least on this candlestick we have entered the resistance zone. And here we can already look for reversal points. So at least on this candlestick I would definitely have entered into a trade. And let's turn on the indicator to see if there are any areas of imbalance. So one of them is here. Well, and I'll move my stop loss so that I can have at least a 1 to 1.5. And let's see how this position ends. Well, it closed very quickly. This is my third trade, which brought me 3,400 of profit. Well, as you can see, it's closed for 1 day, probably a little later than it happened here. Apparently the take was slightly lower, and accordingly we closed at about 10 p.m. As you can see, after a while gold continues to develop in the same downward direction, again forming an inclined liquidity. We would have broken through and made a retest, so we can make a trade here. And also because we have a LOI that has not been updated and is at this level, we also can open a trade with you to upgrade this LOI. So accordingly the take and stop of these trades, well, naturally will be different. This trade will be more conservative. And this trade will be, let's say, more aggressive. But we will also put the stop away. Well, and accordingly the take, we will have a longer one too. So we have about 2 trades like this, and let's see what happens. This particular trade was open to update the last minimum, which I told you about at the beginning of this video. And then there is this characteristics behavior of gold when we take and essentially withdraw liquidity before going into a trend movement. So this trade also brought me more than 5,000 in profit, and it was closed within 1-2 days. Well, as you can see, my last trading week was very successful in many ways due to trading in gold using this strategy. So look for triangles, look for rectangular ranges, wait for the price to update its maximum or minimum to remove liquidity, and then consider entering a trade. Use the imbalance zone and level indicators to place your takes and stop losses. Well, and don't forget to subscribe to my blog on Telegram in order to develop in trading with professional and much faster. Thanks for watching this video. Bye everyone.